First of all, happy Friday, guys. Finally, we have reached the end of the week. And as you can see, I'm very excited about this day. And we have a very interesting topic as well. And also, we have speakers from all over the world. And this is what I really like. Hello, viewers. Happy Friday to you as well. So today's topic is about investments in fintech and blockchain. And I have got speakers from Thailand, France, and India. So please feel free to join us in this tour of the world. Okay, before starting to introduce our speakers, for those who do not know me, myself, Sunny Mohanty, I'm the regional director of LATOKEN. I'm based here in Singapore. And I welcome you all to VCTV, which is the venture capital TV from LATOKEN, where you connect investors with great startups. Okay, I am in Singapore, so I like to go, nearby. I fly nearby. I start with Thailand first, and I'll go with Jack Huang, who is just dialing from Bangkok. Hi, Jack. How are you? Happy Friday. How are things?
Hi. Hello, everyone. Yeah, very nice. Thank you, Sony. Yeah, happy Friday. So finally, it's Friday.
Finally. So, thank God it's Friday, right?
Exactly. So I'm Jack.
Introduction.
Yeah. No problem. I'm Jack. Yes, I'm based in Bangkok, but actually I'm a Taiwanese. So previously I worked for the United Nations as well as the Asia Development Banks. And now I'm working for a Fintech. It's called Aegis Custody. So we provide custody for those virtual assets, for example, like Bitcoin or Ethereum, or even something more like security token. So I'm happy to be invited into tonight's talk. So we hope we can, share more insight.
Absolutely, Jack. Welcome again. I miss going to Bangkok. I have to be honest. Welcome. So next I have Ajay from India. So I moved from Singapore to Thailand, and now Ajay. Ajay, please introduce yourself.
Thanks, Sunny. So this is Ajay. I'm from Hyderabad in India. I understand Sunny was saying Bangalore usually figures out, so it's Hyderabad this time, right? I have been working in the startup space for about 8 years now. Have a portfolio of about 40 startups across various segments, but a focus on fintech. And I was also leading T-Hub, which is India's largest incubator, which had about 500-seater, around 100 odd startups there. So know a bit about startups and happy to discuss furthermore about the investments.
Excellent. Thank you, Ajay. Welcome to VCTV. Last but not least, all the way we take our flight to France, and we have Patrick Lord from Paris. Hi, Patrick. Welcome.
Hello, everybody. Good morning, good afternoon, and good evening to the global audience. So I'm Patrick Lord, partner at Truffle Capital. We're a venture capital firm based out of Paris. We invest across Europe. And for the last 20 years, we've been investing in high-tech startups in bio, medtech, and in IT digital sectors. And in the IT digital sector, we've been investing in fintechs and insurtechs. And we have a dedicated fund of 100 million to invest. Across all of our different funds, we've got about 700 million euros of assets under management. And the way that we like to invest is to be very involved in the creation and the running of the companies. In some cases, we create companies ourselves with entrepreneurs. So we co-create companies. And then when we invest in existing companies, it's typically at the seed to Series A stage, between 1 and 5 million investments. And then we support them through the following rounds up to exit.
Awesome, fantastic. Know about the ticket sizes as well. Great. Now we are all set. We are warmed up. So I'm going to be asking you a few questions around the topic, and which is going to be centered on investments. So I'd like to start with Ajay. Ajay, please share your insights about the recent investments that you've made in the last 3 to 6 months.
Sure. So some of the recent investments that we have made in fintech specifically has to do around neobanking, the idea to give power to millennials and help them do the investments better, share with their family, and use technology to reduce this lag that happens with banking today. Right? In fact, one of our investments is co-invested by SOSV in Singapore, and they have raised about 750K in that round.
Wow.
So technology, usage of technology to reduce the inefficiencies in finance today is where we have seen most of our investments happening in the past few years.
Okay, can you explain a bit benefits about neobanking? Why is it like for the millennials, and what's the advantages, especially during this time we are like going cashless?
Yep. Yeah. So I think you're going cashless and you have your mobile phone always with you. Gone were the days when you wanted to walk over to a bank to withdraw money, etc. Now you want to be saving small and saving at your fingertips. And you want to share the same with your friends. You want to understand what they're doing. So how can all these be accumulated on an app, right? How can the physical infrastructure of a bank be reduced and taken to the mobile phone? That's where neobanking is catching up. Now, what is the backend is not of essence for me as an investor. For me as an investor, what is of essence is the efficiency showing to the end consumer. Is the person being able to effectively save better, and hence latch onto it, share with his friends. So some things that social media, the app culture has brought on is where neobanking is taking the banking to.
Okay, great. You mentioned about SLP, and I think I know William as well. And you mentioned about investing to a startup in Singapore. So your portfolio is not only you only don't invest in India, but outside of India. Can you just share a little bit more about the startup and the ticket sizes and the regions you invest into?
Sure. So we do look at India as our main focus, and there are many Indian companies who would want to establish their head offices in Singapore for various reasons. Usually our ticket sizes can range between 100K USD to 250K, and that's where our sweet spot is. And we come early in the game. We are a mentor-driven fund as well. We would like to handhold the startup right from doing them the publicity that they need to ensuring that the product is what the consumer wants. Usually, we have seen that in the Indian circumstances, people get carried away with the technology they are building and ignore the business side of things. I'm positive it's true across the world, but more so in India. And that's where we come in to make sure they stick to the business side of things much more often. The founders need that awakening ever so every couple of weeks that, it's not the technology, but it's the business that will count at the end of the day.
Well, I'll later. Later on, we'll touch base. Thank you so much for sharing those insights. So, as you know, Ajay has invested into neobanking recently, which is a great news. I mean, digital only banking. Okay, cool. Next, I'd like to ask Jack. Hi, Jack.
Hello.
So please tell us about your recent investments and which regions, ticket size, and portfolios.
Slightly different from Agile. I mean, I didn't invest in company or startup. Instead, I invest in some fixed income product, and which created by our own company because we are fintech startup as age is custody. So what does that mean? Like in fixed income product, we try to create some new form for the future financing. For example, in the past, we all know ABS, asset-backed security. But now we use blockchain technology. We use blockchain technology to do asset-backed token. So we package those fixed income product as a token. So I invest some of them, and most of them, they are from account receivable. between the big buyer and seller. So for example, like Amazon or Lazada or JD.com, they are big buyer. So they do have this account receivable between them and their supplier. And we tokenize those account receivable, those AR. And personally, I invest them. And the size is not really big. It's around like 100K to maybe 500K US dollar. So the return is also very quick. Usually those term is about like 2 months to 3 months. And the annual rate, you can get back around like 7% or 10%. So for me, especially in this COVID-19 period, I will say those fixed income products probably suitable or safe for me to make my investment and manage my own portfolio.
Oh, great. That's interesting. So when you say about tokenization, so do you also, do you also tokenize your platform, or are you only a custody solution?
We provide all-in-one service. Like for first, of course, we need to get those assets, the asset account receivable, of course, or the corporate debt. And then we need to request, because we also have our custody license in Hong Kong. So we request those asset owner to deposit or custody their asset in our custody account. And within that custody account, we can issue the beneficiary interest certificate. And that's where we do our tokenization. So actually, as an investor, because I'm also the investor for that product, I can collect those beneficiary interest token. So which means by the due date, I can use this token, I can redeem my principal and interest. So that's how we manage this portfolio. It's pretty interesting and much faster.
Wow, it's very interesting. And the duration of the investment is also quite less. So
Very less.
yeah, do you consider yourself a retail investor?
Sorry, what kind of investor?
Are you a retail investor or institutional investor?
I'm a retailer investor, of course, because we also want to make this product as more common as possible. For example, we also try to build our own platform, which we introduce a lot of retailer investors. So everyone, as long as you pass our KYC and AML, you can buy that token and you can get this, I would say 7% to 10%, not that bad, compared with the traditional finance. So we would like to open the door to retailer investor.
And yeah, I'm going to ask you about the benefits of the blockchain technology and the future of tokenization later. So do you invest only in any particular region like Asia Pac, or you cover the world, or how does it work?
Basically, we cover the whole world. Yeah, I mean, we have Amazon account receivable, definitely from the United States. We also have some account receivable from Foxconn, that's in mainland China. And we also try to get some from European Union. So yeah, around the world.
Wow, interesting, Jack. I'd like to be in touch with you after the session, because you know what blockchain does. So thank you so much for sharing those insights. So the third speaker, I would like to move to France now. Paris. I love Paris. I miss Paris. I haven't traveled for how many months? Over 6 months. And I feel, it's the right time to go to Paris. Patrick, please talk about your recent investments, which regions, ticket sizes, what stage startup. Thank you.
Okay. Well, firstly, it's interesting to see what's happened over the last few months with the impact of the coronavirus. We've seen, in Paris itself, it's a beautiful city, but the number of bikes has probably gone up by times 10, and it's becoming much more, many more people buying electric bikes and not taking the tube and so on. So now I go to work on bike every day, so I can really enjoy Paris every time I go to work. Just picking up on Jack's point, I really find it interesting, these alternative financing methods, which are very, small companies are looking to raise money. In this period, it's been particularly difficult. Numerous VCs reducing their investments or the amount they're investing to focus on supporting their existing portfolio. And so these new ways that, that companies can finance their operations, I think it's a really great thing. For us, in terms of our investments, during the coronavirus lockdown, which started in kind of March time in France, we actually accelerated our investment activities. We found that working digitally, teleworking, meeting people and companies online was actually faster and in many ways more effective. We found in some ways it gave you more insight into the entrepreneurs, because you see their kids walk into the room while they're talking and their family. You kind of see the person more than just the the front, the business person kind of view. And so we accelerated on 2 deals. Both of the deals were done almost 100% digitally, without meeting the founders until right at the last, the last minute. And so, it was super fast, and really, we just accelerated basically. Now, we also had to spend a lot of time supporting our existing portfolio companies. They needed to, the government was offering guaranteed debts to them, so we helped them access that kind of financing. None of our startups we didn't need to reinvest in order to deal with their cash situations. But talking about the new, we can maybe talk about that later, but talking about the new investments that we did, there was 2 areas that we're particularly interested in. One is fintechs for small and medium business, because they're historically very poorly served by the banks. Usually because the cost of serving small business tends to be too high to study, study the finances of each startup. Tends to be quite a manual process, and often they don't have all of the financial information they're looking for. So there's numerous solutions, fintech for small and medium business, to raise money or to manage their business better, manage their billing, manage their accounting, and so on. And so some of our startups have been able to, leverage on that in order to boost their business, to help small businesses suffering under the crisis. We did a new investment in a company called Akazi that offers accounting solutions for freelancers and independents, which is, again, helping them do their business better, get off the ground. And the second company we invested in, another area that we're interested in, is insurtechs. And we invested in an insurtech that digitizes the whole broker relationship with their customers. So from selling the product, choosing the right insurance product, to then managing the interaction with the customer and managing the claims, the whole process is digitized using their platform. And what's interesting is that they use artificial intelligence to augment the process at every single stage, so that when someone is looking for home insurance, it pulls up a Google map. It analyzes to see whether they have a swimming pool as well, or if they've got a second building in the garden. And then the person can start asking, oh, well, maybe you need some insurance for this and that as well. So it's already enhancing the sale of the product and better aligning the product to the need of the person. Then later, when they do a claim for wind damage or storm damage, then it immediately pulls up the wind speeds that were in the area at the time. It validates that it enters into the storm category, et cetera, during the claims process. So we love anything really that's using technology such as AI and that leverages data to improve the experience, to improve and speed up and reduce costs in the experience. So that's just 2 examples, small and medium business, helping them just focus on their business more and less on the things they don't like doing, like the accounting and insurance. And the brokers are looking for ways. They need to sell online more. Everyone's seeing digitization has been accelerated by the coronavirus crisis. And so the demand for these types of products are just increasing all the time. So this is a great time to be investing in digital and in fintech at this point.
Excellent, Patrick. First of all, I'd like to congratulate you for closing 2 deals during the pandemic without knowing the founders before. All the deal flow was all digitally done. Congratulations for that, because I think this is the first time somebody in my panel has shared that, because everybody would have known the founder at least once or twice before they close the deal. They're closing the deals on Zoom calls, but they knew the founders beforehand. That's number one. Number 2, you spoke about those two products. One is the automatic accounting software for freelancers. Is it something like Zero, like that we had before, or is something different?
Well, it goes beyond just the accounting, and actually what it does, it includes all of the billing process and so on, but it's specifically oriented towards freelancers. It's actually, the vision is to build a complete vision of the cash of a business. And so the entry point is via, a super simple to use a billing management and an accounting preparation solution. But over time, this is going to become a full manage your cash and your finances solution for small and medium business. And the way we invest in companies is that we are also looking for synergies between companies already in our portfolio and the new companies. And so we have companies in our portfolio that offer credit short term to small businesses and freelancers. And so they can plug that into the same platform and leverage that relationship in order to sell more products. So our portfolio companies can go to market together with complementary solutions and help grow their business together.
Oh, excellent! I'm loving this now. So the portfolio companies that you hold are actually partners. Great.
Also,
so is it like based?
Yeah, sorry.
Please go on, go on.
Also, we try to create partnerships between our portfolio companies and the investors in our fund. Because the investors in the fund, of course, there's a financial relationship. They want a return on their investment. They want the fund to return, good returns for them. But also, we connect our fintechs with the banks, for example, and the banks can then roll out that functionality to their professional customers who have business bank accounts, and they can offer that as a value-added service to their customers. So we try and leverage that also to help accelerate the growth of our fintechs.
Great, that you're building a whole ecosystem actually. So you have
that's what we call it. We call it an ecosystem approach to investing. That's how we like to.
Yeah, sure. I had one question on this accounting software. Is it based on a subscription model?
It is. It's based on a subscription model, really cheap. I think there's a freemium version to get started. Then there's a cheap version at €3 a month, a medium version at 10, and then for the full features, it goes up something like 20 a month.
Right, great. Okay, awesome. Talking about the InsurTech software that you mentioned, I mean, based on the AI, is it only for home insurance or you cover other areas as well?
Well, that company is currently doing it for P&C, property and casualty. So it covers home, car, and bike, and a few other things in that space. They're starting to look at health insurance now. It's really a question of focus. You've got to start with a focus and focus on one kind of product, particularly with the artificial intelligence. It needs to be trained on specific products so that it can, be the best it can for each product one at a time. They need to connect additional data sources for the health type insurance, and they need to train the engine so that it starts to give, useful upselling advice for those. So they're working on that now. That's where they're at in terms of they focus on the P&C to start with.
Great, awesome. So if maybe I might have messed this out. So you only focus on Europe, right? As for investments?
I mean, basically, we invest in European companies. We invest primarily in France, but we do invest in other European countries, and we have a particular focus now to try and invest more in places like Poland and the Baltics. And we already invest in the DACH region, Belgium, the Netherlands, and Southern Europe. We're keeping an eye on it, but particularly for fintechs, we find that Poland and the Baltics are pretty, and the Nordics as well. Sorry, are pretty good. They bring pretty strong candidates for fintech investments. Now, I mean, I haven't mentioned the UK, and I'm from the UK, so why are we not investing there? I mean, basically, the fund that we have now is focusing on early stage, and we prefer to do that closer to home, and particularly with the licensing issue of UK companies having to get a license in 2 places now, as well as the London license, but then they need to get it in Ireland or Lithuania or wherever else. We are launching a later stage fund, which is going to invest in Series B and beyond.
Right.
And for that one, we are opening up to UK companies because that's typically the stage where they're looking to launch into the rest of Europe. They've proven their market in the UK, then they want to launch into Europe, and we can help them with that because of our connections with the banks and insurers and so on.
Fantastic. I'm loving that. Since you mentioned that you are from UK, I'm also from UK. I moved to Singapore 8 years ago from UK. Thank you, Patrick. It was great knowing your portfolio companies and the success stories in terms of investments. Now I move to Jack. Hi, Jack. So, what has changed in the investment scenario with alternative investments? So people are exploring alternative investments to cash investments or fiat investments. So please enlighten us. How has things shaped up? How COVID-19 has actually benefited, the players in alternative investments?
I see. People always try to find more, provide higher return or lower risk investment. So that's, we try to find those alternative investment. So take our case example, we try to package those, already existing product, and we just try to use blockchain technology to, package it again as a token or tokenization. So I would say COVID-19 make people to think more about how we can properly manage our portfolio or our investment. So compared with those traditional one, like in stock market or in debt market, I would say alternative investment provides something more interesting or even higher return. As I say, like we provide 7 to 10% annual return in our account receivable tokenization. So I would say that will be in the future, that should be one of the very important concern for the investor to do that. And taking another side, things like we all know the COVID-19 is increased the digitalization. Everything can be digitalized. So why not the investment can be digitalized as well? So that's how we think about how to build the new product, how to build up this new ecosystem for more, not just for the professional investor, but also for the retail investor. So more and more people, because of the technology, because of maybe even the COVID-19, they can think about how can they access those investment or those portfolio, which they have never been accessed in the past. So I would say, that's also bring us a very good opportunity at the moment.
Yeah. So how does blockchain technology, because people sometimes, blockchain technology is not, might be been around for quite some time, but still I hear people saying it's a buzz, it's a hype with no real use cases. What's your take on that? What do you say? What do you think? What's your thoughts?
I would say, when people try to, I would say, criticize blockchains because they still think, the blockchain is always about Bitcoin, always about the Ethereum, the price go up and down so quickly. But that's not all. Bitcoin and Ethereum, they are cryptocurrency. They are just very small part of blockchain. Blockchain is a technology, just like a website. You can criticize the certain website, but you shouldn't criticize the website at all. So that's the major difference. So talking about the blockchain technology, I will say it's a pretty safe, decentralized system for not just financial work, but also maybe for data, for AI, for more, different areas. So why we use blockchain technology is because we believe that decentralized mechanism is a very good mechanism for investment. For example, you don't really need those agent or those middlemen to control your transaction. Instead, you can do that by your own self. You can verify those transactions by yourself or with other players. And that's built a very solid and strong system. And we can even build up the trust. So that's my view on blockchain. I will say that's a pretty interesting technology.
Great. Thank you so much. At least somebody believes in the technology because you have real use cases, Jack. Probably we should be the advocates of the technology. We should teach people the benefits. But still, again, it's just like a general it's a very general view that I'm giving now, because people usually, when they don't know something, they probably are critical about it unless they use it and see the benefits, right? Okay, that's okay, that's understood. Thank you so much, Jack, for those insights. Now I would like to move to Ajay. Ajay, so please tell me, what has changed in the VC investment space after the pandemic? Because obviously, when the entire earth got hit by coronavirus, people were skeptical about, probably making new investments or probably topping up their current portfolios. So, but gradually with time, people just realize this is the new norm. And we can't stop investments, right? So tell me what's happening in the space since the pandemic started up until now, where we're like nearly going to be end of the year.
Yeah. I think one of the main things that's happening in the space is people are realizing that digitization and startups related to that would definitely be the things that will be growing. So VCs have started looking at those startups particularly, and let's say hospitality has taken a backseat, right? So clear trends of segments which are doing well or are poised to do well are something that VCs are clearly looking at. The other thing is, I think there is better bargaining power with VCs right now. Having said that, I do not see the deal flow reducing. We're having more calls with the startups. We're trying to do the due diligence better, because if you're not meeting in person, you would like to understand the person better. So that's happening a little more deeper than what used to happen. But overall, the deals are going through, and I do not see a slowdown as such, right? Initially, there was caution, but I have not seen anything past the first few months. The deals are happening specifically in the fintech space. There is, in the Indian market, there'll be a lot of consolidation happening. Lots of larger players looking to pick up the smaller ones because, for the right technology. And that's something that VCs are also looking forward. The developed markets have seen the mergers and acquisitions happen quite often. India is on the verge there. And I think VCs are looking at that wave now to get their exits. So that's one thing that will happen more and more in the next few years. And I would look forward to exits from fintech specifically in that way.
Great. I mean, good news. Investments have gone up. So have you closed a deal recently, or totally on a digital medium, through a digital medium? Could be Zoom, could be any video calls.
Well, I am most comfortable closing the deals through the digital media. In fact, the signatures, that's a problem, specifically with the Indian laws. But it is, so we have closed, as I said, we have closed about 4 deals in the recent past, all digital. I might have known the founders very earlier, but in the case of 2 startups, but the other 2, we have not known them. So this is fresh, and we have closed them digitally. It does help if there are other investors who are coming along. So if it's a round where we see other investors coming along, it does help the entire, gaining trust and confidence. But we do have deals which is alone and through with other investors.
Yeah, but you rightly pointed out on the signature part. I know India and China, they use chopping, like other countries as well, chop, like in a stamp when they sign something. So how did you overcome that?
I think, again, that's another hot area where, you see a lot of startups coming up. So there is, again, I think the laws are not specifically mentioned. It's how we are doing things. And now people have woken up to the idea that you could digitally sign and get through things, and hence these various startups coming up in that space. So they take an undertaking from you that the digital signature is okay with you and okay with all the parties, and hence you can sign it digitally. So yes, we are able to do it all digitally. Still, the banks do not accept it in India, at least.
Right.
but the rest of the things are being taken care digitally.
Great. Since we are talking about investments, and let me just continue with you, Ajay, before I move on to the rest of the speakers.
Sure.
So, what are the best? Because you said that you mentor startups as well, right? You handheld them till they get invested. So, what are the best practices that you follow from an investor perspective, as well as the best practices that you advise the startups as well to get funded?
Sure. Yeah, and it's at times tricky for me to play both the roles, right? At times, the investor in me asked for a different thing to do, whereas the mentor might suggest something else.
Yeah, I'm sure.
But I think the best part is to back the founder, hear the person out, because you're backing at the stage that we are investing. We are backing the horse, right? I mean, we are backing the jockey. And I need to ensure that I'm hearing the person out. I need to ensure that I know why they're doing what they're doing. It's more as a sounding board rather than trying to give the right advice. Finally, you have to call a spade a spade. So that's when you do it.
Absolutely.
But you want to hear them out. You want to hear why their views are different, because hearing to many startups and having invested in many of them, you have your own perspectives. But you know that the perspectives which are disruptive is what you want to bet on. And hence the founders might have something right to say. It is very important to hear to them and then decide what it is. The other point is definitely data, right? I think data is something that we're keen on to follow, to try to understand on a monthly basis what's happening and what is not working. That is something that the rigor needs to be put in from a mentor. And that's something that I'm keen on.
Right. Great. Got it. Thank you, Ajay. Thank you very much.
Sure.
Thank you, Ajay. Next, I'd like to ask Jack. Jack, because tokenization, we see a lot of projects, a lot of startups, a lot of companies, they want to tokenize their asset. They want to have a asset-backed token. They want to have a stable coin. They want to raise funds by tokenizing their asset. So if a new startup is exploring, for example, they have a product already, but they would like to raise funds by tokenizing the assets. So what are the best practices should they follow as per you? As a retail investor, why would you invest in them?
I would say it's always depend on the underlying asset. So if we are talking about the startup, so basically I think they can only tokenize their private equity or their shares. That's the only thing which is valuable. So we will go back to the traditional VC world, like depend on how we evaluate those startups or their ideas. But instead of that, if we are talking about how to help the small and medium-sized entrepreneur or the company, the existing company, to raise their working capital, and that we can utilize the tokenization more than the startup. For example, as our company's example, we tokenize the account receivable, which is the debt between supplier and the buyer. So that you have the certain value of that. You have the fixed term, you have the fixed rate, and you know when you can get back your money. So that will be a very interesting thing to help company to raise more fund. But back to the startups, if they want to tokenize their private equity, I will say we still have to go through the traditional steps. For example, like we need to find the auditor, we need to find, how much your company worth. And then you can simply just as what you pitch VC or pitch other investor, you tokenize that share and you can just put that on the public market. And somehow the retail investor is provide that channel for the retail investor to buy that share directly instead of go through the VC or fund or other centralized agencies. So yeah, I would say that's supposed to be the future. As we all know, STO, security token offering, that will be an alternative term instead of IPO. So in the past, usually the startup takes like 7 years or even 10 years to IPO, unless they can publicly be listed. But now if we want to use blockchain and tokenization solution, it's made it may shorten this period. If you want to do STO, it may just take you like 2 years to 3 years. You can try to link yourself to the capital market, more efficiency.
Yeah. Right. So talking about STO, because I am in the industry. So what can I say that obviously I've seen the market evolve. I've seen the highs. I've seen the lows. So who are the investors in this STO? Why I have heard people saying that there are limited investors in an STO as compared to an IEO or an ICO. And what is the reason? I mean, why STOs are not still the main means of raising funds, raising money? As 2 years back, I knew STOs, but still the market is not very mature. What is the reason, do you think, behind that?
I think it still takes time. Everything, if it's new, I mean, people usually worry about, I mean, if we are talking about investment, so taking your money out of your pocket is usually people think more. So yeah, just because in the past, like we all know ICO and we all know all of those, I would say, not really good project. They try to use ICO to raise money, but eventually they fail. So people are afraid, people are scared of that. And STO, in terms of, I mean, since 2018 or 2019, more and more jurisdiction or country or I would say regulators, they notice this is an opportunity and this should be the future trend. So more and more regulation is coming. And I will say it still takes time to let people realize what's going on and realize actually it's not different from the traditional financing. It's just an alternative way. Yeah, alternative way to get your money, to invest your money. So yeah, I will say take time. I believe the blockchain investor will be more.
As a user of the product, I know it's secured, it's faster, way better. I mean, I'm the user of the product, so I know I can tell that. I can vouch. Thank you, Jack, for those insights. Now I have Patrick. Hi, Patrick. We have a lovely weather there in Paris. I can see that bright, sunny day. I just want to know from you, what are the best practices the VC should follow before investing into a new startup? And what are the best practices a founder should follow when approaching or before approaching a VC for their money, or for the second seed round, or the different other higher rounds?
Mm-hmm. Well, obviously the first thing is that the VC is investing in the team. That's always the number one concern. So we need to, there's a number of things that we check. We check that obviously the founder really understands their business and their market. We check that in terms of connections, network, advisors, and so on, that they have good advisors, although that's something that can be corrected later with our help, if they don't have enough on that. We check that they really know how to run a business. And by that, I mean that they have the right mindset for creating a successful company. And the right mindset includes being very data KPI focused from early on, because if they're not focused on managing by measuring, or measuring in order to manage, then they're not going to understand whether they're getting that product market fit or when they're getting it. They're not going to fully understand the customer needs and how best to align the product to match that. So that's one thing that we are testing with the founders as well. It's their ability to build their business and their business plan based on understanding the market, understanding the unit economics of their business. What is it that's going to drive growth and profitability in this business, and do that by measuring things. If we ask them questions around key metrics, around customer acquisition, lifetime value, annual recurring revenues, things, and they're starting to and ah about it, that's already a red flag for us. They need to know this. They need to be on top of it on a day-to-day basis. So that's one angle. Another thing is that in terms of our investment strategy, investing round about the Series A stage, we're talking about companies that should already have proof points. They should already have recurring revenues from strong customers, less churn. There needs to be some level of proof and of traction and growth. When you're investing at a much earlier stage, you know, as Ajay was saying, you really are, you're betting on the jockey and, you know, their capability to kind of build that. Now we're betting on the horse as well. So, you know, we need to make sure that the horse is running in the right lane and it's going, you know, fast and has a chance of going faster than the others.
Right. Okay, great. Thank you, Patrick. Because it's a Friday and we would like to finish our session by time, I would like to know if you have any questions for your co-speakers or co-panelists. Ajay, you got any question for Patrick or Jack, or Jack, if you got any question for Patrick, please feel free to ask. This is the time.
Sure, thanks. Yeah, what I've seen in the fintech space is there are solutions which are localized in most markets, right? And I've not seen many startups, I mean, like a Facebook come across in the fintech space, which is being globally accepted. What are your views, Patrick and Jack, on such a proposition? Or why is it that this exists?
Well, to take that point first, I think when we invest in fintechs, we are looking for companies that can be global companies. I mean, we are looking for that. The question is how to get there. And in the fintech space, particularly, you have certain constraints on that, particularly if there's regulation involved, which tends to vary from country to country. And even in Europe, where we have a passporting system that allows you to get a license in one country and launch in another, there are still other factors that still need to be managed in the detail. You know, if you want to offer credit or do banking or whatever, offer accounts in other countries. So you may have the license, but then you need to be able to open, for example, if you're a neobank, open IBANs in more than just your country. It's not that simple. So that's the first, you know, kind of limiting factor. I think the second thing is that if you're the type of product that needs to work with the incumbents, then that also limits your ability to go global straight away, because you've got to do deals with all of those. If you need a fronting bank for a credit product, or you need, you know, use banks or insurers as a distribution mechanism for your product, again, you've got to build those relationships and do that. So I think, you know, the fintechs have a global mindset, but it's just, you have to do it kind of step by step. If you're in Europe and then you want to launch in the US, the regulatory environment is completely different. It's also much less clear and much more difficult to navigate around. So again, it's a major step for like a European fintech to then launch into the US, for example.
Very good.
I would like to echo what Patrick just said. Yeah, just take ourselves as example, like age scarcity. We do have this global mindset. We are so ambitious. We have our headquarters in San Francisco, and we have the branch office in Taipei, in Hong Kong, and in Singapore, and Bangkok as well. But eventually, we found that it's pretty difficult if you really want to run the global business, especially for fintech, about finance. Technology is fine, technology is global, but finance is really, really local issue. So, for example, we want to sell our asset-backed token, but that one in Taiwan, it will be regarded as the securities. And whenever something has been regarded as securities, it's super complicated. You cannot really sell to the retail investor. You cannot really sell to the normal people, you know, on the street. You can only sell to the professional investor or accredited investor. So that's a pretty harsh thing. So that's why we change our strategy. We focus on Hong Kong, which we already got the TCSP license. It's a custodian license. And we also trying to get the license type 1, 4, 7, and 9, make ourselves as a qualified security provider or whatever. So that's pretty, you know, difficult things, especially talking about the regulation. We're talking about the finance regulation, for example. So yeah, we do have our global mindset. Like, as I say, we have different branch offices. It sounds so fancy, and we have a global employee. But eventually we found that we have to do step by step. So we focus in Hong Kong, and we try to make ourselves successful in Hong Kong. And then we try to copy that model to other jurisdictions. So I will say, yeah, I agree with Pat.
I think Yeah, Jack, you touched on a very good point regarding STOs, like what happens in Taiwan type. I think US also has some stringent uh,
Exactly.
regulations and laws when it comes to security tokens, right?
Hmm. Yeah, it's
Yeah,
pretty difficult. So, and you don't really want to cross that line. Otherwise, you will get a really huge fine from the government.
great, thank you. Any other question from our co-speakers?
Well, Jack, you were talking about, doing business in Hong Kong. What's the impact of, what's happening there now with regards to the China law and all that kind of stuff?
Yeah, that's what we worry about as well. So we do have the plan B. So we try to move everything from Hong Kong to Singapore, to be honest. That's kind
Welcome.
of, yeah. Because the capital, if you still put that in Hong Kong, is probably not going to be safe as in the past. So yeah, the political issue is one very critical thing there. So even some of our I mean the professional investor or from family office or from those big institute, they try to ask us if we can, move our kind of the regional hub from Hong Kong to Singapore. But the difficult thing is like we already spend a lot of time and money and effort to collect the license in Hong Kong. So now if we will have to move to Singapore, we have to start everything again. That's quite annoying and time consuming. So yeah, I would say we will try to find a way.
Mm-hmm.
Okay, great. But still, if you need any help, I'm here, Jack. Thank you.
If you say so, I will just share with Aja and Patrick. And we are at the pre-A stage. So we hope to close the deal by the end of this year. So if you are interested in our idea, business model, let's keep in touch.
Yeah, we should. Send me. I'll get the Sunny. I guess you can share our mails. So yeah, that's cool.
Patrick, I heard that you only invest in European companies. So I hope we can be your first Asian company.
There you go. There you go. Collaborating between the different continents. That's the whole idea. Thank you. So we go 9 more minutes. I just want to ask a quick question. Like obviously Patrick and Ajay, you hold a lot of portfolio companies under you. So I just want to see what you've seen, what is emerging out of this pandemic and successful pivots from the startups, like startups who are in the restaurant business or where in food businesses, how did they sort of pivot using technology to a, like a Grab kind of thing where food delivery and stuff. I mean, this is just an example I'm giving. So you can share more from success stories from your portfolio, Patrick.
We haven't really had any pivots as such, where it's a real, a major shift in the focus of the product. One of our startups offers payment solutions specifically for the tourism and events industry.
Yeah.
And because it's a commission-based model where no one's actually paying anything anymore, then their revenues kind of drop to zero pretty quickly. They at least had a subscription component to the model as well, so the impact was less than we feared. But their model allowed many people to band together to buy in a group. So, for example, if they want to fly together on Air France somewhere, then one person can order can kind of reserve the tickets, but then everybody else individually pays for their ticket rather than that person buying everything and trying to collect the money afterwards. And we looked at other industries and other verticals where they could apply this. And so, we looked at the energy sector where like gas bills and utilities for people who are living together. Students living and working living together, for example, and also for telco companies, again, for the same type of customer where there's people living together, but they have to share the bill between them. And so they did more focus on that in the commercial efforts and signed pretty quickly, one of the biggest players in France in that sector. So that's a kind of a nice success story that they were able to diversify a bit. But for their current customers, they continue to support them. And in fact, they used this confinement period to really improve the product and work with their existing customers to say, how are we going to help you relaunch after the confinement, after the deconfinement? How are we going to help you generate more business? So they've been implementing things like payment in multiple installments, as well as payment by groups, so that it makes it easier for people to to buy and start reusing those services again. So yeah, they try to help their existing customers to ensure they obviously they keep them and can help them still grow their business, and they focus on other verticals as well to diversify.
Absolutely. Great example there. Thank you, Patrick, for sharing those. Ajay, similar stories, success stories that you've seen within your portfolios because of the pandemic?
Yeah, yeah, there's an interesting startup which was using AR, VR to improve the virtual experience of a consumer when they walk into a retail store, etc. But then given the pandemic and given everything is going digital, they have now moved even into the banking sector. They're saying, how can you make your digital contact better? How can you make your first experience better with your end consumer? So now they have customers in the banking segment, and now their tagline is to make everything virtually better for the end consumer. Right? So it's a great example of what has happened in the last 6 months and how they have pivoted from a retail experience company to someone who's a horizontal serving various segments and even going to the banking financial sector.
Oh, that's quite a huge shift from AR, VR retail to banking. And so we, as an investor, were you not worried about such a huge shift because it's from totally different product?
As I said, so the baseline of the product is the same and they added flavors around it. But as I said, at this stage, we are backing the founders and where they see the growth happening. We also realize that the retail has taken a hit and hence it's not a great segment to be in right now. So, and actually they're doing pretty well. They raised another round, etc. So we see that the shift has actually helped them. And we see that the initial fear was not there. It was more an interaction with the founders to understand whether they're actually clear about what they want to do. And will the product find the success that they think they would?
Great. Oh, that's a great example for all the founders out there and the investors as well. It's very encouraging. Thank you, Ajay, for that. So we just got a few minutes before we close the session. I'd like to ask, each of you to give some closing remarks and also feedback about our VCTV. I'd like to start with Jack.
Okay, I'll say thank you, of course. Thank you all. And I also learned a lot from another two speakers. And yeah, I will say thanks for LATOKEN TV and hope we can meet soon again.
Yeah, sure. We'd love to have you on our panel regarding on cryptos and tokens. Thank you, Jack, for those. Patrick, closing remarks and feedback about VCTV. Okay,
well, thanks for the opportunity. By now, I know every video networking tool on the planet through force of necessity. So I'm starting to feel a bit of an expert in doing these kind of online webinars. This is also something that our startups are doing more of, webinars also to generate business, which is actually working pretty well now. I think, yeah, digitalization is what we're all about. It's accelerating and we're here on the wave making it happen. So thank you for allowing me to join and speak on this. It's been great.
Thank you, Patrick. Ajay, please, your thoughts.
Sure. I think this is a great thing. You have speakers from across the world and with different perspectives, which is very nice for both the founders and other investors. I have seen that founders during this time need all the talks that they can get. So I think it's totally good to have such things. I really would like to thank VCTV for this opportunity and my co-speakers. It was nice meeting you virtually.
Okay. Thank you. I just want to add something before we close for today. Today is a Friday and weekend is just starting out for us in Asia. So this is the platform. So the whole point of this platform is to connect investors like yourself and good projects and startups who are looking for investor like yourself, and investors who are looking for great startups. So if you go to our website, www.latoken.com, stroke events, you can see all other VCTV sessions that we host on different topics as well. And we have another new section that we've come up on our website. It's called www.latoken.com/profiles, where your profiles of the investors, the VCs, the investors are getting featured right now. And the whole purpose of this section, where you can see profiles of VCs, is to give our startups an exposure to these investors. Because so we get Patrick on our VCTV, and Patrick's profiles is up so that Jack, whenever he needs, he can reach out to Patrick, very smoothly. So that's the whole point. Please look into our website and feel free to give us feedback both on our events section and our investor profile section. We would like to take all open suggestions from all of you. And again, I would like to thank you very much for your time on a Friday evening for us in Asia. And Patrick, your day is obviously starting out, already afternoon, but thank you so much for your time. Please do look into our website. We have these sessions running Monday to Friday. I host it out from Singapore. I have colleagues hosting it out from US as well. And if you are interested to be on a panel, please, you can get in touch with me or my colleague Carol, who would have sent you the invitation, or my colleague Maria. So thank you so much for your time today. And good evening, good afternoon, and have a great weekend. Let's please stay safe because as Patrick said, France is a red zone. Please stay safe and let's stay connected and have a great weekend. Thank you.